I'm John Dobis, editor of the Forbes Dividend Investor. Since we started last July 11th, we've made about 190 stock picks. Our total return is something we can fortunately brag about, up 15.9% versus 10.8% if you had bought and held the S&P 500 index at each of those times. So we're doing better. Dividend stocks actually since last July have not been outperformers. The S&P 500 has outpaced the DVY and other big dividend in ETFs like that. So congratulations for joining us on our quest. We've had a lot of great success. Some of our early winners, some of our biggest winners have been in companies where you think that the growth is long since gone. How about TV stations? Sinclair Broadcasting Group is up 180% since we got it last November. It seemed like it was too cheap to last after the election. Eaton Corporation, an Irish industrial company, up 77%. Quad Graphics, they print magazines, gosh sakes. They're up 72%. H&R Block, the tax prep company that you thought might be kicked out of business by Quicken and QuickBooks and stuff like that. No, not at all. Up 67%. Questcor Pharmaceuticals makes a radical prostate cancer therapy, and they're up about 67, actually more like 80. This is last week's numbers. So congratulations again. We've done very well. One area of the market that has held up very well since we topped out, interest rates have been going higher for the past 2 months. The rate on the 10-year note has gone from 1.65% in April up to 2.6, above 2.6 here in late June. So here we have, since May 1st, this is the SPDR KBW Regional Banking Index. It's up 7.5%. That's great. That's the sector. Here's the financials, and here's the S&P, actually down 0.25%. The market really topped out on May 21st. But here we have our banks. Look at that. In that same period of time since May 1st, this green bar here is First Merit, FMER. They're a Columbus, Ohio bank. They've been acquiring other banks. The yield's not that high, but look at the return for the period, 19.03%. We've had some great 11% gainers here. Bridge Bank Corp, People's Bank Corp. We've got Trustco, hasn't come along like we wanted it to, but the yield is about 4.8% right there. Univest just added it recently. The sucker's up to 11% for us. So regional banks, which ones do you buy if you want to buy right now? Well, here we have the spreadsheet right here. Let's take a look. This is grouped by the score on our model, which, as you know, looks at discounts to price to sales, price to book value, and price to earnings, and a couple of other growth factors. The best ranked one is FCBC, First Community Bank Shares. We just recommended it on Monday in June here. So first, FCBC is looking the best. PWOD is Penns Woods Bank Corp. A lot of these are in Pennsylvania. A lot of them are in the Northeast. But Penns Woods is currently yielding 4.6%. You've got a 4% yield here out of NBT Bank Corp. And you still have a good-looking discount to the 5-year average price-to-sales ratio. That's one of the least fudgeable numbers out there. You can't fudge revenue. You can fudge profit, you can fudge book value, but there's still a good discount to their 5-year average price to sales ratio, 6% for Penn Woods. NBT's down 11% from its 5-year average. And you've got Univest, United Bank Shares, and Trustco still looking the cheapest of that group. And also you've got PBCT down here, People's United Financial. PBCT is the ticker symbol there. Just wanted to bring you up to date on some of those banks because they're still popping. They're still outperforming the market. They thrive. If you think about it, they lend out money long-term for things like homes, cars, and businesses, but they raise money by paying depositors peanuts, less than 1% these days. So if the Fed, in fact, does stop buying bonds to the degree that they're buying them now, and long-term rates go up, the net interest margin, as it's called, will go higher for regional banks, and it's kind of been a no-brainer trade for a little while. So always apply 10% trailing stops to what you do. You've seen the value in that in a lot of these stocks that have the high dividend yields. A lot of the mortgage trusts, a lot of the mortgage REITs we've been blown out of long ago. One of them that's still working right now is Hatteras Financial, HTS. That's in the top 25 that you get on every Friday. And another AI, Arlington Asset Investment. They're not a REIT, but they behave like it, and they've lost a lot less since the top of the market. So check out the banks. Keep reading your newsletter. Each pick is a good pick that comes out, and every Friday you get the top 25. Choose from those stocks if you want to put fresh money into the market. Hope you're making as much money as all of us are.